Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, November 1st, 2016. I wanted to do an update, just a video overview of the active short trade ideas. I'll start out here just touching briefly on the broad markets, and then we'll move into the trade ideas. As of yesterday, they're all up to date. I'll explain what that means here in a second. But just keeping an eye on the broad markets. Remember the broad markets, I've made the case. If you're new to the site, I'm not going to do an extensive video right now, or a coverage, I should say, an extensive coverage on the broad markets. Just go to the menu bar, click on Market Analysis, and you'll be able to scroll down through anything that is related to the broad markets is listed under that market analysis category. You know, a lot of it has to do with the longer term picture being bearish, a deterioration in breadth, a lot of other things. So I still favor a downside resolution from the trading range that we've been locked in for the last few months here. But I pointed out before, I have what I call these flashpoint levels on the SPY. It's 211 is really a critical support level I'm looking at. You know, the bigger picture is recently, or I should say the more simplistic picture is that we've had a breakdown of on all the major U.S. stock indices of these uptrend lines, which were also wedge patterns, breakdown, back test, and we're just holding above those key support levels. And I think that 211 on the SPY, once that goes, will really trigger a pretty sharp sell-off. If, and as I said before, if and when all the other key levels on the major indices like the QQQ, NASDAQ 100, the NASDAQ Composite, the Wilshire, the mid caps, the small caps, but if there were only two U.S. stock indices that I had to follow, it would be the S&P 500 and the NASDAQ 100, and so that's why these are the tracking ETFs. So watch that 211 level. Trend indicators are now bearish and have been for a while on the SPY. Q is holding up again. I've mentioned the NASDAQ 100 has been really the leading index for quite some time now. Let me get you to the right board here. That's the level I'm watching there is 115.75. You know, it really is the bottom of the trading range that we've been in for the last, gosh, going back all the way to, you know, late July, early August. This trading range here, barring this one brief, what I call whipsaw signal where we broke down, snap back up right up in the range. And so that, you know, is again, that proved to be a whipsaw signal. Normally you would have expected the bulls to take in that and run after a false breakdown, a bull market like that. You typically have a strong follow through to the upside, and that didn't happen. The reaction was very muted. All we did is went back within this sideways trading range, which we've been. So again, if I think the charts, the evidence overwhelmingly supports a break to the downside from these ranges. If I'm wrong, if and as we approach the top of these ranges again, let's take a look. You know, I always say the charts are dynamic, not static, meaning they change. So if the Qs start moving up, if the S&P 500 moves up, these divergences are burned through or taken out, market breadth starts to improve. We've seen a clear trend of deterioration lately. Then my analysis will change. But as of now, I have not been able to make such a bearish case in the market for quite some time now. Again, those are the levels 115.75 on QQQ. Watch for a break of that in conjunction with a break of that level I just mentioned on the SPY. All right, let's take a look at the trade ideas, and we'll try to wrap this video up. Okay, yesterday I mentioned all the short trade ideas are up to date. Now what that means is if you go under, if you're a subscriber to the site or a free trial member, you can access this locked content, the trade ideas. So today we'll just go over the short trade ideas since they've now been updated, and I'll try to get the longs updated soon. This also makes room to add some new trade ideas. There's quite a few that I'd like to add that look compelling right now. So if you click on active trades short, which we're at now, we're already on that area. This shows you what I call a symbol cloud up here. There's 9 active short trades that are official. There's quite a few unofficial. They don't show here. Many of those look very well. I'm personally short those. I know some of you on the site are short those or have recently shorted. We had quite a few that did well, hit profit targets recently. But I wanted to point something out just real quick. If you're new to the site, to navigate in catch up on the trade ideas, I'm often asked, well, what was the entry price or the suggested stop on, let's say, AVGO, which is Broadcom. If you come in through this portal, if you come into trade ideas and click on the active trade short, and I click on, this is what I call a symbol tag. You have the ticker symbol, and as you can see when I hover, it's hyperlinked. You also see some symbol tags down here. You can access symbol tags here. Well, if you come in through the trade ideas and you click on AVGO, as I'm going to do right now, what that'll do is load all the posts on Broadcom only limited to this particular trade. As you can see, I scroll down, there's two. There's a trade setup when I first posted the setup with what would trigger the entry, price target, stop loss. Then I did an update once that entry was triggered, just a heads up. The next update on AVGO will most likely be when the first target's hit, or if the trade happens to be stopped out, and then at that point it gets moved out to the completed trade category as soon as I get around to updating it, and then it will disappear from these trade ideas. Now, with that being said, you can click on the symbol tag. If you click anywhere other than coming in through these categories, these are different categories. Again, click on a category, it'll show you the trade ideas, or the post, I should say, to that, only related to that particular trade. Now, if I wanted to look at all posts on Broadcom, I click on this symbol tag, and what it will do is load in reverse chronological order, meaning with the most recent, everything that I've ever posted on the site that has been tagged with AVGO. If I tagged it with AVGO, it means that there was a mention of it, a chart posted, it was a trade idea. Here's a previous trade on Broadcom where it was the first price target was hit for a 7% gain, then the trade went on to become stopped out. Another way to do that, besides clicking on any of these symbol tags down here at the bottom, if you use this select tag box. So if I hit this, it drops down. I'm going to type in AVGO. You see it jumps down to that. I don't have to scroll all the way down. Just type in the symbol, then click on it. And again, that will bring up all posts, and there's more down here. You load more. Broadcom's a big company. I've probably traded that stock, personally, and maybe on the site officially, personally probably dozens of times or more, and it might have been an official trade idea a half dozen times. I don't know. You can go and check that. So that's how it works. But again, come in here, trade ideas, active trade short, and this is an easy way to catch up on whatever trade that you're interested in. Just click on it and you'll get all the notes. All right, so let's look at the charts now. Let's go to Broadcom while we're there. We started with that one. Quick update on the trade, what I think of that. Okay, Broadcom, if I recall correctly, was shorted on a break of this minor uptrend line, or I should say rising wedge pattern, divergent high, 3 consecutive divergent highs. I really like the pattern. Like everything else, remember, the broad market has gone sideways for months now, so a lot of the short trades and longs, it's been frustrating. Whether you're a bull or a bear, short, long lately, I do both. I trade long and short, and I've seen, I can't recall, there's been periods in the past similar where you've had so many trades, clearly bullish or clearly bearish chart patterns that have had the stops just barely run, and the patterns go on to play out. I mean, there are times where bearish chart patterns are foiled. There's a breakdown, proves to be a false breakdown. The stock then goes on to rally. The divergences are burned through. The bearish formation's no longer in place. That hasn't been the case lately. A lot of the trades that we've seen stopped out, especially on the short side recently, I've either added back personally, I've given them more room on my stops, and I plan to add a lot of those back as official trade ideas. I'll use one example here in a second, but I just wanted to share that, Broadcom, although it's really not going anywhere anytime fast, at least not recently, the case has been made, and the same case that was made before for a considerable move down is still very much intact. What I'm watching, these are minor support levels, S1. You can see we've danced around these levels. S2, second support level, we hit that, fell down, we hit that S2 level, bounced, came back. We've been dancing above S1, which is a support level. S3, meaning third support level, is this uptrend line, which actually now at this point, you can see that really comes in before S2. Trend lines are dynamic. They change, over time. Uptrend line, the prices come in higher and higher. First target, second target still remains. And this is just something, I showed you after each divergent high, we had a correction. We had a correction after that divergent high. This is correction 3. How deep will it go? Well, here's a common theme that I'm seeing right now. The charts are what I refer to. I use a term. It's a made-up term, but I say the charts are stacked. What I mean by that is when I look at the daily time frames, then I flip out to the weekly time frames, I'm seeing they're both in almost all the cases with these short trades or long trades. There's not many longs right now, but the short trades I'm looking at, again, I made the bearish case here on the daily time frame, which is usually good for a swing trade lasting, daily time frames, a few weeks to maybe a couple months. However, when I look at the weekly chart, I see a much more powerful bearish rising wedge, much larger. This is that yellow uptrend line I had coming in on the daily chart. You can see it goes all the way back to early 2013. It's well defined, meaning there's a lot of reactions on that trend line. There's a large rising wedge. If you take the measured projection of the wedge, which is just, you take the widest part of the wedge, which would be right here, you add that to where the wedge breaks down. Let's say it breaks down soon. And that gives you, this is just a rough estimate to give you the measured projection or measured target of a wedge. And that would bring you right down to this reaction low here. And there's a couple reactions there. That level, just FYI. And this is a potential long-term target. It's about 100, a little over 99. We'll call it 100. My minimum, this isn't the official target, I don't believe. But just looking at the weekly chart, that would be my minimum expectation. So if you're a swing trader and you're willing to ride out all the zigs and the zags, meaning the counter trend bounces, I have a high degree of confidence that Broadcom, which is again a leading chip maker, semiconductor stock, is about to go over in the coming months. It'll probably take months to get there. Remember, stocks do fall faster than they rise. The stock's about 168 now, so if we drop down to that 116.65 area, you're looking at about a 30% drop. And that's, again, one of the leading semiconductor stocks. And I see this across the board, bearish divergences. This chart couldn't look any more bearish to me. And that's, what I see in the semi sector. So first things first, and that's a break of each of these levels. That just adds to the case. So this one still has a lot of meat left on the bone, and I may extend, as you see here, I have potential longer term swing target. That just means at this point in time, T2 is my final target at 140.29, but I may very well extend that, because when this trend line goes, again guys, that's that weekly long-term uptrend line. It goes to the left of the chart all the way back to early 2013, and what that means is it projects for much more than a drop of only 17 or so percent. But even if we get the 17%, that's still a pretty nice drop. All right, let's move a little faster. ISRG, that's an official trade. It's in the medical device sector. I'm very bearish on that sector. In fact, just a week or two ago, I actually took the time to put together a video to cover some of the stocks and make the bearish case for that sector. And although I didn't have room, there were so many trade ideas already on the site, especially short trade ideas, that I just went over some of those as unofficial trades. They played out very well. ISRG is playing out very well so far. You can see this yellow uptrend line. It really forms a bearish rising wedge with this white uptrend line and this yellow uptrend line. But I also have this trend line here, and this is a price channel, an ascending price channel, these two white lines. So what happened if we zoom in, we broke below that channel, flagged, you can see sort of a flag type pattern right here, bear flag, broke down, but we've hit this level. I had that listed before as S1, meaning first support. The difference between S1, first support level, and the first target level is I wouldn't list S1 as a support level if I didn't think there wasn't a decent chance of a reaction. However, my expectation anytime I list S1, S2 is I expect those reactions to be very minor, meaning not much of a bounce, if any, and very fleeting, meaning we only consolidate for maybe a day, a couple days, a week or so. This one's gone on for about a week or so, and this is a consolidation, so my expectation now is ISRG, if and when it breaks below this level, it'll be a pretty quick move down to that first target at 648.25, maybe a little consolidation there, bounce, maybe not, and then a move down to that second target at 612.35. All right, and then there's a potential third target, which I really do think has a good chance of getting hit, and that's a drop still from where we're at now, another 16.5% or so. Let's just look at a couple there. We'll follow up. I went over some of my favorites in the sector. We had ZBH. This was a very nice, divergent high, three consecutive divergent highs. We had this uptrend line. I think I pointed it out here while we were still above this trend line. That one went on to gap down, hit this first target that I had, danced around there for a couple days, and then a huge drop down. So this one, just since the video is down, dropped about 18-19%. Again, official, unofficial, I wouldn't have listed it if I didn't think it wasn't worth mentioning. And congrats that caught it. So even if you were targeting this third target, you got caught in a gap that actually is a gap that went your way. If you have on final targets, I like to put buy to cover, good to cancel, buy to cover orders. So a buy to cover order at 114.82, good to cancel, would have executed. Those limit orders can only execute at a price equal to or more favorable. So what would have happened? The stock opened that next day opened at 106.93. That's where that order would have been filled. So you would have had about an 18 or so % gain. Congrats to those of you that caught it. EW is another one, did the same thing. And this is just a beautiful pattern. I went over these. It's bearish rising wedge pattern confirmed with negative divergences. When I highlighted this one in the video, we were up in the pattern. And I'm assuming that's an earnings-induced gap. But as I often say, much more often than not, gaps after an earnings report or guidance, a gap, whether it's a bullish gap or a bearish gap, more often than not, goes in the direction which is already indicated by the chart. So what I mean by that, if the chart is ambiguous, if I can't make a clearly bullish or bearish case, it's a crapshoot. Don't hold a stock in earnings. You shouldn't even be in a stock if you can't make a clearly bullish or bearish case. But in this case, this chart was screamingly bearish. This is a textbook bearish rising wedge pattern. And again, it's not 100%, but much more than 50% of the time, when there's a big gap after earnings, it will go in the direction of the pattern. If it's a very bullish chart pattern, then I will hold that trade into earnings. And once in a while, they go against me, but more often than not, they go in my direction. So, and as you can see, the technicals work. Here's a big, that was a second target level. I had it at this reaction low, and we did a little momentum overshoot, danced around it. But if we drop down below that T2 level, then this is the next target. I'm already out. I'll cover that one. But that, if you're still holding it, I think there's a good chance this gap will be backfilled right here, and this one will move down to 89.70. Let's see. I think that's it. There were a couple others that I covered in the medical device sector, but Medtronic, here's another one I'll just touch on real quick because I know some might be in this one. Trend indicator is bearish. I had this S1 level here. It's 82.37. So what's happened since then? You can see all the reaction from above. Finally, we gap down below. And remember, once support is broken, it then becomes resistance. So what happened is the stock came back tested. These are objective entries. When shorting a stock, the most objective entries are a break of support, as we had here, which gapped down, or a push back to resistance, in which case, again, former support becomes resistance. So you've had 1, 2, 3 opportunities to short this. My expectation is for a move down to this target here, or this next support level around 79.08. So you want to cover a little bit above that. And the nice thing about shorting a back test to resistance is you can set your stop just above, slightly above, maybe on a daily close, since we've had a lot of stop runs today. So you have very little downside if you short at resistance with a stop above. and a whole lot of profit potential. So excellent still, and we're very close to, we had just back tested that again today. So this one still offers an objective short entry, and I have a second target. Again, this is unadjusted. When you see the level, if I don't have an equal sign, T2 equals, this is the actual support level, 73.17. So this is an unofficial trade. I didn't adjust that. So my buy to cover order on that one, I think, is like at 74. I'm sorry, 73 something. I'd have to look at it. I don't have that screen up right now. But you want to probably put it 15 cents or so above that level. So, call it somewhere around 73.30. Set your target, because the actual support's around 73.17. Okay, while I'm on the unofficial trade ideas, and I digress, I'll get back to the active. There's not that many active trade ideas short right now that I've cleaned up the list, although I have quite a few I plan to add. Here's another one, and again, this is just this one is the epitome of the theme that I've been seeing lately with these stop runs. We shorted Activision. It was a breakdown. I might have modified this trend line since. It ran up, just barely clipped the stop. I mentioned at the time, this is one of my favorite setups, and it still is. I'm personally short this one, still short this one, although it was taken out on the site. We have a bearish rising wedge confirmed with negative divergence, just as we did back here. That wedge from the point it broke down was good for a drop of about 32%. This wedge, although not as steep, is a little bit larger in scope. And you have powerful divergences confirming negative divergence. So I expect nothing less than another drop of 31% or so. These are all potential targets. In fact, I would put good odds that Activision is headed down here to at least this level around 27.80. That's a 36% drop. Again, beautiful pattern. It's broken down again. So this one will probably be added back as an active trade. And again, the common theme when I look at these daily charts, they are confirmed with the weekly chart. So if Activision, which is now already broken down from that wedge on the daily chart, so this one is certainly offers an objective short here. And when I look at the weekly chart, I see a rising wedge pattern with a divergent high that has just recently broken down, back tested, broke down, back tested for a couple weeks, and has since rolled over, started to roll over. At the very least, and again, that wedge is confirmed with divergence. At the very least, I expect another visit to this trend line here. That trend line hasn't been visited since this area here. We had a visit here. We've touched the trend line back here, touched it here, touched it here. So we have these reactions. So again, that's the very minimum I'm looking for a drop down to that trend line. And based on these divergences here, it wouldn't surprise me after a reaction off that trend line that Activision continues on to break that trend line, go down to that $24 area over time, which would be a drop of, if that does occur, you're looking at a move down, 43% or so. So I'm looking for, again, a bear market more so than a correction in Activision. And again, that'll probably be added as an official trade idea. All right, let's finish up with the ones that are active. This is MO, Altria Group. This one played out, came very close. We had a breakdown back test. I forget exactly where we shorted, somewhere up here for this trend line break, either just above it in anticipation or when it broke down or when it back tested. I'll have to look at the notes. This one reversed just shy of that first target at 60.28. In fact, we came in within, let's see, try to grab it here, low of 60.82. So very close. Since reversed. Now, normally when in updating these, I briefly, looking at this chart, I thought, okay, maybe we came close enough to hit that target to have fulfilled that wedge breakdown. However, I'm leaving this one on for the time being, despite this bounce, because when I look at the weekly chart, what I see is a back test. Again, you have to look at all the various time frames. This is a very powerful divergent high. Look at these negative divergences that span for well over a year. We have a bearish rising wedge. We have a wedge overthrow. Some of you might know that's one of my favorite chart patterns. An overthrow is when you have prices pop through the top of a bearish rising wedge or down below a bullish falling wedge. And then typically what you'll see from there is a pretty swift move to the downside with that wedge going on to break. In this case, now we back tested. So my expectation is that this one will still play out. I'll leave the stop in place just to protect. I think the gain potential on this one is about 15% with about a 5% stop loss if we're taking out, maybe less. So nothing big if we're taking out, and nothing huge on the gain side. But I still think it has a very good chance within the next year or so. I would put the probability that Altria is going down to the $56 area at minimum. I would put those odds at 70%, 80% or higher. And if they run our stops, they run our stops. It's just part of the game. You got to use them. There are times like this where I'm seeing a lot of stops run lately, clipped. The chart patterns still look good, so personally I may extend some of those trades. And on my account, some I do let go. It depends on the trade, the chart, and a lot of other factors. How much exposure I have to the sector. SBUX, SBUX. This one, you can make a glass half empty, glass half full case. Somebody I think pointed out, that there was maybe a bullish falling wedge pattern. You can see this downtrend line. There is some bullish divergence on the 60-minute chart. However, the trend indicators are bearish. The PP or the MACD is below the zero line. That indicates the trend's bearish. This one, let's take that line away for a second. It really needs a crack below this 52.72 level, which is starting to it whipped below there today, and it's closed back up there. Actually, it's right at 52.55 right now. Not to split hair. This one's very close. This line here, let me color this line, make it stand out. We'll color it orange, and call it 52.50 or somewhere around there, especially on a daily close above there. This one has a thin zone. You look at the volume at price histogram, see these green and red bars. If you're watching this on YouTube, you may have to turn the brightness on your monitor up. There's quite a lot of the trades, in fact, the majority of the trades over the last year or so have occurred, have occurred above that level there. So you can see on the volume price histogram bars, all this trading. That tells me a lot. In technical analysis, this is where most people have bought the stock. So if we drop below this level, they are underwater. You can see the thin zone. You can see these volume price histogram bars. It's very thin down to this target zone. So my expectation is for a relatively swift, not a straight, not a 1-2 day, not even a 1-2 week, but a drop that will be fairly unidirectional. So far we've been grinding around and relatively swift. In other words, I expect this is what, 2014, now we're in October. So this is over a year of gains right here, or a year of price action. And I expect that 1 year plus of trading history, if all these trades have taken place, those gains will probably be wiped out in just a matter of a couple months, 2-3 months possibly. That's my expectation. So SBUX has a little work to be done, but I like it. I think it looks good on both the daily and, more importantly, here's a weekly time frame. Again, you have these negative divergences. You have this ascending price channel. Prices have broken down, back tested, and my expectation is over time, SBUX probably work its way down to that 41.60 level. It's pretty good support on the weekly chart, and that would be my longer term target there. All right, a couple more. Semis, as you guys know, the semis are one of my favorite sectors. It's been frustrating. We've probably had more stop rates on the semiconductor trades than anything else, but this chart still screams bearish to me. Divergent top here, big correction. Divergent top, pretty decent correction. Very clean bearish rising wedge with a divergent top, or this flagging type action. There's a little price channel here. That's consolidation. So you really want to watch, if you zoom in on SMH, look for a solid break, and especially a daily close or an impulsive intraday break below that. And that'll probably bring us down quickly to that first target, relatively quickly. Again, when I speak, I'm talking in relative terms. We're not going to go there probably not in a single day, especially an ETF. This is a diversified ETF. This isn't any single one stock, so you're not going to have a gap or a move, a one-day drop in the semiconductor ETF of, what is that, 8.5%. But you could certainly get there in a couple days, a couple bad days, trading sessions. This is the one of the other semiconductor ETFs. There's a few out there: SMH, XSD, SOXX. They just have different weightings, different components, but they're all semis, a lot of overlap. And you can see this just is a clean picture: bearish rising wedge, breakdown, back test, and I very much see this one heading down here to the this support level here. It's around 102 or so at bare minimum. So I think like I said, a lot of potential right now with the semis. Let's go on to the next one. That would be UEIC. This is a tech company. Universal Technologies. It's already gone on, hit the first target, reversed just shy of the second target here. Just having a little reaction. And still looks good down. I've a lot of confidence in this one hitting that third and final target. So that's personally what I'm holding out for on my trade. But again, everybody's different. That's why I list these different price targets. Some people don't have the gumption. They like to take quick profits. They like to maybe get in and out, move out to the next one. Some people even trade around these levels. But again, I don't see anything in the chart that indicates this one won't hit this target in the coming weeks to months here. Here's what UEIC looks like on the weekly chart. You have these uptrend lines, they break, minor uptrend lines. This one you have, what stands out now is you have this long-standing negative divergence. You have this high was a divergent high. These other ones weren't, and they still led to corrections. So the longer-term bearish case can certainly be made for UEIC, that is. All right, 2 more to go and we're done. WB, Weibo Corp, another tech company. Beautiful, clean, well-defined uptrend line, bearish rising wedge, confirmed with divergences. A lot of increase in volume, which is indicative of maybe a buying climax when you see these volume bars spiking up here. And since that wedge breakdown, they don't all run the stops. This one broke down and, had maybe a day back tested for about a day and has rolled over. And I think we're just shy. That first target's at 45.72. Let's see, we got, I think, within basis points yesterday. Low was 45.92. So 20 cents within there. I have all the confidence, the highest degree of confidence that level will be hit, as well as that second target. And ultimately, if that second target, we might get a reaction there, but I still favor a continued move down to T3, the final target at 34.82. That's WB. Yahoo, I think this one reports today or tomorrow. I just remember getting a pop-up. I'm short this one. I'm short, I think, all of the ones I've covered today. So Yahoo is, again, if you're risk adverse, company's going to report. You may want to close a position out. We're profitable. I'm trying to recall. I don't have the notes in front of me where we shorted this one, but the story here is a big bearish rising wedge pattern defined by this uptrend line and this line. You had a breakdown and a back test, as I mentioned here with that arrow. And after the back test, we rolled over. This S1 is this minor uptrend line. We broke below that, back tested, and have since been moving lower. S2 is the next support level. Expect that to be hit, and then here's your price targets. So again, it's up to you. Like I said, more often than not, it's been my experience that any gaps after earnings, and Yahoo is a gappy little stock. I would expect this one to gap one way or the other after earnings. It's up to you whether you want to ride through, reduce your position, hedge, or just close it out. Because again, I think we are profitable on that one. But I'll maintain right now these price targets T1 and T2. All right, that's it. I think that's all the trade ideas I wanted to update. I know this video went a little long, but hopefully that is helpful and kind of it gives you my thought process. And again, the theme is that the charts are stacked. You have bearish developments on both the daily and the weekly time frames, that if you have the patience and the markets break those key support levels I talked about, you can put some of these away as longer term swing trades, and instead of shooting for low double-digit returns, you can be shooting for high double-digit returns, as long as the broad markets, the sector, and of course the individual stock, whatever stock we're trading, confirms that. All right, this has been Randy Finney with Right Side of the Chart, and I will get some new trade ideas posted on the site as soon as possible. Have a great